Hey guys, it's Dexter here from Tier 1 People. Just before we get into today's show, just want to give you a heads up on a new opportunity we're working on here at Tier 1 People. Are you ready to build something big? Join our client, one of the fastest growing consumer fintech apps in Asia, as their expansion lead in Australia. You'll launch the brand, recruit your team, and drive growth in one of the world's most exciting fintech markets. We're on the hunt for your typical unicorn candidate, a growth expert who makes shit happen and can handle a unique role where partnerships, digital marketing, growth ops, strategy, and recruitment all come into play. If you've taken a fintech business from 0 to 1 or 1 to 20 and want to be part of something big, reach out to me on LinkedIn or apply now at info@tier1people.com. Hello and welcome to Fintech Chatter, the show where I connect with fintech leaders to chat about their secrets to success. I'm Dexter Cousins, your host and the founder of Tier 1 People, the executive search and recruitment firm that's dedicated to helping high-growth ventures hire exceptional people. Today's guest in our special series on housing affordability is Michael Ragavan of OurLegUp. Michael, welcome to your Fintech Chatter debut.
Pleasure to be here. Thanks for inviting me onto the podcast.
You're welcome. So, we've, as I mentioned in the intro there, we're doing a series on housing affordability. Do you want to tell us a little bit about OurLegUp and just a little bit about the business?
Yeah, sure. So at OurLegUp, we're building Australia's surrogate bank and mum and dad so that partner lenders can democratize access to home ownership. It means aspiring homeowners with as little as a 5% deposit can purchase a property at the same interest rate as a 20% deposit, and they save on LMI. So they're in 5-10 years faster, saving tens of thousands in the process. And the way we make that possible is by taking the concept of a guarantor home loan and evolving it into a diversified investment product. So for the property owners or the investors participating in that, they're able to generate a return on often inaccessible equity in their property without any capital outlay. And that's the world's first.
Yeah. So when you say that, I've got a mortgage, I've got equity in my home. For me to access that, I've probably got to extend the loan with my bank, which
that's
I've
right.
got to pay, another 5-6% on top of that just to access some of that equity. Is that right?
Exactly. So the other options are essentially refinancing and you cash out and then you can go invest that, or say home equity line of credit, reverse mortgages, very much debt products, but we've created a investment product.
Got you. So what was it that kind of got you to identify, I guess, first of all, the problem and then the solution?
Sure. So as a personal purpose, I wanted to work on diminishing wealth inequality. And in Australia, the number one driver of generational wealth inequality is not owning a home. So for most Australians, homes are their largest asset. It's their most important wealth accumulation vehicle. But when it comes to saving for a home, the biggest barrier is essentially getting a deposit. And it's only getting harder every single year as we see house prices increase and the cost of living crisis on our hands, salaries can be outpaced by inflation. And so there's multiple contributing factors here, but that's essentially the problem that I wanted to focus on and solve. I think the flip side of it is the supply challenge, which also elevates property prices. Over the past 20 years, purchasing power for the average income household to acquire a median priced home has fallen by about 20-25%. And when we look at 2 decades ago, 90% of Australians middle-aged or older would have owned a property at some point in their life. Australia was largely a home-owning society. But if we look at the statistics now, approximately 1/3 of Australian households are effectively locked out of home ownership and thereby miss out on this critical wealth-building vehicle. And so unfortunately, it's very much a compounding effect. And that's why I wanted to shift my attention to this problem.
Got you. So when did you start OurLegUp?
Sure. It's actually been 4 years now.
Right.
So yeah, prior to this, I was a mortgage broker, investment banking, and also investment advisor for property developers, so always around finance and real estate. I feel like I had a front row seat watching this housing crisis unfold and sort of compound over the last decade, which is what led me towards it.
Yeah. And in terms of, I guess, the kind of solution itself, are you like a, a fintech, as in you lending products, or are you an investment product, or are you more on the tech side? Like where have you focused more of your energy on the innovation piece?
Yes, very interesting question. And I would say that we don't lend any capital and we also don't hold investments. And so we are a platform, but the innovation is in the financial and legal piece, as
Right.
opposed to the technology used to deliver it. And so I can elaborate on that
Yeah, yeah.
a
If you
bit more.
could, that would be great. Yeah.
Yeah, sure. So it was really during the Hayne Royal Commission where there was a crackdown on who could act as a guarantor, and rightly
Yeah.
so, because of the financial risk placed on well-meaning individuals without any financial benefit. And so previously, even a mate could act as your guarantor, but that was essentially restricted to your immediate family or your parents. And the second order consequence of that was that it mainly impacted the 40% of Australians who didn't have the benefit of their parents providing them a leg up. And so it was at that point that we decided to create a new financial product for this purpose. And so, one, it had to be sort of safe or low risk enough for our parents to participate. And two, it needed to provide an attractive return, not just sort of rely on charitable intent. And so that's when the innovation we had to focus on was largely around what's the financial engineering behind the product? What does the legal structure look like for this product? And that was really the first sort of 18 to 24 months of our journey.
Hmm. And then talk me through the last couple of years, and what have you kind of experienced since getting the product ready and kind of getting product market fit?
Sure. So um, following those initial 2 years, which was very uncertain in that every step of the way, we weren't quite sure if we would get legal feasibility. And that was a sort of large part of the work that we did. There were two other parts. So one was investor education, and the other part would be sort of establishing partnerships with lenders. And so the first part, in terms of trying to educate investors about how they can make a return on inaccessible equity without any capital outlay, it's quite a new concept. And for 9 months, we were trying various different messages, types of messaging, different platforms, but we weren't really getting anywhere. And I would say that over 9 months, we probably got loosely 3 million commitments. But then we would take what worked and we kept iterating on it. And we went on a different podcast. And off the back of that, we got 100 plus inbound leads. We're
Wow.
able to get about $20 million worth of commitments. So on that, we did eligibility assessments, indicative valuations, had everyone on title sign an equity investment agreement. But that happened suddenly, whereas for 9 months, we barely saw anything. And
Yeah.
so that was a really interesting sort of journey. And just seeing that you can put the work in consistently, but you'll actually have no external validation. And that sort of just comes at one point in time. And you've got to have faith that throughout that process, you are improving. Um, so that was, an interesting thing to see. And then the other part, which has been quite challenging, is essentially having no reputation in the market. So there's no track record as a business.
Yeah.
But then being in a highly regulated environment, trying to essentially partner or sell to enterprise clients who have a low risk appetite. And so I think you can't quite expect a smooth ride,
Yeah.
but it's just about being there, establishing the relationships, building trust, building confidence, moving them towards action. And yeah, it's very much been a learning curve and it's taken years, but we've finally gone to the stage where we've progressed through due diligence and are working towards launching a product with a couple of lenders. But it's very much been hard fought.
Yeah. So in terms of the kind of product launch, when will that be happening?
It'll be in the next few months. So it is very exciting.
Yeah.
This process has been quite front loaded with R&D. So it's been almost
Yeah.
4 years now. So it'd be pretty fulfilling for the team to see the product in market, finally supporting low deposit
Yeah.
buyers again.
Yeah. How have those conversations been with investors then? Because they kind of I guess the investment appetite here in Australia, to kind of invest 4 years into something and still not have a product in market doesn't really tie in with the mentality of the
Definitely,
kind of investment landscape here in Australia, where they
for
like to
sure.
see kind of a returns. How have you been able to, I guess, one, manage investors, two, kind of raise capital to kind of see you through this period before you kind of get the revenue stage, and then like how have you kind of just managed to yeah, kind of be very kind of see that capital out so that you don't have to shut the doors.
Yeah, yeah. Good questions. Naively, we thought, or I thought, it would take much less time to get a
Yeah,
product out, perhaps 18 to 24 months as opposed to almost 4 years. Um, and so along the way, we've had to learn to celebrate the small wins and also explain the progress that we've made to investors. And so there's sort of 5 key milestones that we were working through. And so initially it was financial engineering, risk return mechanisms, then it was legal feasibility, so investor facing docs, bank facing docs, legal opinions, regulatory hurdles.
yeah,
Then it was getting investor interest on the equity commitment side, building that up. Then it was building the tech. And then it was, of course, getting banks on board. And so taking them on the journey has been very important, and showing them that we are making steady progress. But it has been difficult to raise capital. Initially, we had a check written to us by Antler, did a small round on a safe note off the back of that. And then we didn't start raising again until recently. And so I would say that a few things have played into how we see the market appetite for a company like ours. Um, One would be the ESVCLP or ESIC compliance and the perceptions around that and whether regulated fintechs are compliant. We had to do quite a bit of work to ensure that we were confident of our compliance with ESIC, and demonstrate that to potential investors. The other thing is, or that made it challenging for us, was that we couldn't point to another market and say, look, this innovation exists in this other market.
yeah,
And so we're just replicating that model in this market. Because we're doing something new, people wanted to essentially, or investors wanted to see the product in market to have that confidence. And because it's quite a drawn journey, we've actually just had, quite lean years, fractional team, and been trying to make it work on a shoestring budget. And fortunately, I think the ecosystem has moved a long way in the last sort of 10 years. There are a lot more early stage investors around. There's a lot more accelerators and incubators around.
yeah,
And so that's been a godsend for us, to be honest. We got investment from Antler, from Startup Bootcamp, from the Monash Generator, and we're going into another one now. But that is a lot of what has kept us afloat.
yeah,
The other part is people who understand the industry, people who have worked in banking, wealth management, insurance, who are investing. They could see the vision early on, even though perhaps I couldn't articulate it as well. And so they wrote us checks because they could see the potential. And so those are sort of the two
but
types of
yeah,
investors that we've been targeting.
yeah. And in terms, you mentioned there the kind of teams being fractional. Have you kind of what have you been able to kind of find people with the more of the technical skills, you coming from more of the the kind of as you mentioned, more mortgage broking and the financial services side? What's been the challenge for you in kind of finding the tech people to help you realize your vision?
Yeah, sure. So I would say we're about 4 FTE across 7 people. And for example, our CTO, he was initially 4 hours a week and then 20 hours a week and then full time.
Yeah,
And his experience, he had been at NASDAQ as a lead engineer for the last 7 years. I've worked at IBM, Department of Finance. And so um, I think they came for the what and stayed for the why. So
yeah,
supporting with building the technology, but then because of the purpose, they were happy to then stay on even in a fractional capacity. Our chief risk officer, uh, he's about 20 hours a month. And right now we don't need more than that. Had we
yeah,
been paying
yeah,
him full time from day one, we just wouldn't have been able to cover our
yeah,
costs.
yeah,
And so being able to get people that have a significant amount of experience to work on the business for X amount of hours has been very valuable in terms of steering us in the right direction, being present in the relevant conversations, helping them move forward. And so I've actually found it to be a very beneficial model.
Yeah, cool. What have been some of your biggest wins so far, Michael?
I would say the legal front has been a big win in terms of, so just for context, we had our first check from Antler, and then a law firm that had been doing some pro bono work for us, financial services lawyers, essentially came back and said that this product was not legally feasible and that we could potentially go speak to some prudential banking lawyers, but gut feel we wouldn't get very far, be very expensive, and essentially would be at a dead end. And so that's when I thought, God, surely you haven't brought me this far just to leave me here.
Yeah.
And I started reading through the relevant laws and prudential standards and coming up with structures myself. And approached about 10 different lawyers. And finally, one of them said, oh, maybe one of those structures could work. And then there was a period of 18 months of uncertainty working through the structure, investor-facing docs, bank-facing docs, regulatory hurdles, to finally get to a point where we could have the structure, the document suite, and then produce a legal opinion off the back of that, saying that it was compliant, it would have the intended effect on a bank balance sheet pursuant to the relevant prudential standards. So I'll say that that was quite a difficult process, but a really big win for us. And so in that, now we have a sort of world first innovation. The other major win was just being able to come up with a solution that was beneficial to all parties involved. So beneficial for the investor, for the bank, and for the aspiring homeowner, trying to make something that is value creation rather than trying to take from one person and give it to the other. And so, yeah, coming up with a tripartite solution, that was a win for everyone.
Awesome. What can we expect from you in the next 12 months?
In the next 12 months, sure. So very excited to see the product live in market, supporting home buyers. I think the teams are excited to see it as well. In terms of the next 12 months, it will largely be piloting with a few lenders and growing the team. So those are the two main things.
Awesome. And in terms of the kind of the distribution, how are you getting the product out to market?
Sure. So we've got the two sites. And so on the lender side to support aspiring homeowners, we're actually very much in the background, even more so than LMI to an extent. We support the bank. We allow them to lower their cost of capital so that they can offer reduced interest rate home loans with less risk and improved margin to aspiring homeowners. They don't even really need to know that we exist. And so we go out through the bank's direct and broker network.
Got you.
On the investor side, we did do trials directly, but we want to scale through trusted financial advisors. So the likes of wealth managers, mortgage brokers, accountants. And so we have a couple that we've built relationships with who would like to distribute our product, but that's essentially how we'll scale on that side.
Awesome. Well, Michael, it's been really cool to chat with you about OurLegUp. Where can people find more about you guys?
Sure, www.ourlegup.com.
Awesome. As always, folks, you can find me on LinkedIn. If you're new to the show, make sure you follow us if you're listening on podcast and leave us a review. And if you're watching on YouTube, give us a thumbs up and also hit that subscribe button. It really helps, one, increase the viewership and listenership of the show, but two, and most importantly, really helps elevate great Aussie founders and great Aussie fintechs like OurLegUp. Until the next episode, keep well.